Let's get to Diana Olick with the very latest here. A lot of people are watching this very closely and cheering the decline we're seeing.
The one thing they're cheering today, right, Melissa? Look, rates are falling hard and fast. They came down all of last week, most sharply on Friday, and they will likely be even lower today. Last week, the average on the 30-year fix went from 6.81% Monday to 6.4% by Friday. That's the lowest level since early May of 2023. The recent high was 7.52% in late April, and home sales have been falling ever since. Buyers were battling not just high interest rates, but also high home prices and a lack of supply. Supply has improved a little, but prices are still overheated. But take a look at the difference. In just a few months, it is stark when it comes to affordability. In April, a buyer looking to buy a $400,000 home with a 20% down payment and a 30-year fixed mortgage would have been facing a monthly payment of $2,240, not including insurance and property taxes. Today, that payment, $2,000. Now, more buyers would also qualify for the loan at today's lower rates. An even bigger impact is on the refinance market. At today's rate, well more than twice as many borrowers can now benefit from a refi compared with 1 year ago. The vast majority of borrowers today do have loans with rates well below 5%. But for those who may have bought a home in the last 2 years, this is an opportunity. Homeowners are sitting on a record amount of equity, but cash-out refinancing has not gained much over the past year. Melissa?
How do you think the decline in mortgage rates balances out with the fears of recession, Diana? I mean, the reason why mortgage rates are falling is because people are worried about what's going to happen with the economy, and the decline in the stock market obviously impacts how people feel about their wealth, their situation.
Right. I mean, you would think that, like, I look at the builders today, you would think they might be less bad than some of the other stocks. But really, if you look at this as being your single largest investment, yes, mortgage rates have come down a bit. But if you're worried about the economy, you might be worried about your job, you're worried about your future, you're not going to want to take that step, especially if you're the first-time buyer. But I think if we start to see rates more in the 5% range, that might kickstart a couple of people.